So today we're going to touch base on another large aspect of qualification, the income area. We talked about employment previously and also credit, but income is another large factor that we're going to discuss here today. And we understand that from a lender aspect, there's a lot of confusion about how to calculate income, what you would qualify, and so on and so forth. So the basis that we look at is income should be stable and consistent. And we're going to look at the different types of income and how we calculate them. So we talked last time about W-2 income, salary and full-time hourly employees, right? So there's other aspects of W-2 income that we can use for qualifying a client. So we can look at overtime, we can look at commission, we can look at bonus. And when we look at those, we look at them having a 2-year history of receiving it and that it's not declining, meaning it's stable and consistent or increasing. Then we can do a 2-year average of that income and use that for their qualifying. In some cases, on a case-by-case basis, we can look at 1-year average, but that's to be determined when we look at the client's file. Variable income. So this is W-2 income that may be stable, but it may not be consistent. And in this case, you may have a server or somebody who has 1 week a certain income and the next week it's higher or lower, but it's variable over time. And we want to see that they have a 2-year history of receiving that variable income. And then we divide the income over the 2 years to get what we could use for qualifying them. We talked about self-employed. That's the standards. We talked about that in the last call. Social Security and pension income. Those are very good resources for income. We look at an awards letter for Social Security and pension, and then we look at their gross monthly amount that they receive, and that's what we can use. We just determine that it's likely to continue in the future. Alimony and child support. So we can utilize this income as well. So we want to make sure that you're receiving the child support or alimony for at least 6 to 12 months, depending on the program, to determine that it's consistent and stable. We also look at the divorce decree or settlement statement. So we want to make sure that we know what all the terms are in that agreement and see if we're not missing something. And then we look to make sure that that income is going to be received for 3 years after closing. All right, so that makes sure that we've got that income coming in later on. There's also a lot of other income types that we can use and we would review with the client when we do their pre-qualification. But the standards we look for is we want to make sure it's consistent and stable, and then we want to make sure that they're expected to receive that income for at least 3 years after closing. All right, so those are some of the factors that we look at from a other income type standpoint. So now, what do we do? We've got the income. We know what their income is for a qualification. What do we do with that? Well, next we want to look at their debt to income ratio. And this is a ratio that qualifies a client based on a measure of what debt load that they can handle from a lending aspect. So what we do when we calculate this ratio is we take your monthly debts. We look at your credit report debts, what's your new housing expense going to be, and then we look at a couple of miscellaneous other things depending on the situation. And then we divide that into your usable income that we've calculated. And then we come out with the debt ratio or debt to income ratio. And in the industry, we usually look for a standard of about 45% as the maximum debt to income ratio. There are exceptions to go higher that we can look at on a case-by-case basis and depending on the loan program. But that just gives you a general idea. So if you're within that range, then you can qualify, and that's part of the qualification process. Well, keep us in mind. Follow us on social media for helpful homebuyer tips and frequently asked questions. And again, we appreciate your time, and we look forward to helping you achieve the dream of home ownership.